And we're back with another end of day report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. Okay, so this is going to be the last report for this week. As you know, it is a holiday week. Markets will be closing early this Friday. They'll be closing at 1 p.m. Eastern Standard New York time. And on Monday, the markets will be closed in observance of the holiday. So have yourself a 4 or maybe 5 day weekend. I know I'm taking off. So you should do the same. Spend time with friends, family, loved ones. It's good to push back and take some time off. Markets aren't going anywhere, and they will be here when you get back. I've already put the bug in your ear. I told you that I believe something monumental is on the horizon, something that they cannot stop or don't want to stop. And if you want to be one of the lucky ones to catch it, you're definitely going to want to head over to PulseWave Trading and make sure that you sign up for these reports, because there's a lot of things that either I don't have the time to get to, or it's impossible to deal with it in these videos. But the reports that you receive nightly go into much greater detail and let you know exactly what the system is seeing and specifically what to do about it. Even your favorite markets, it tells you how you should approach each market each day, regardless of what's going on, regardless of news events or any of those things. Doesn't matter. The system is very clear in how you should deal with things. So, wanted to put you up on game on that one. If you have not already done so, you're definitely going to want to take advantage of what the PulseWave reports have to offer. Um, and just head on over to pulsewavetrading.com. Take the 14-day free trial. It is free, no strings attached, no fees, no money involved. We let you trade alongside us for 14 days. See how much money you can make trading alongside us using these reports. I think you will surprise yourself in not only how easy it is, but also how much money is out there waiting for you to collect on a consistent basis. But you got to first make the first step, and that is head on over to pulsewavetrading.com, sign up, and receive these reports for yourself. And for those of you that do not have the time or the wherewithal to do this yourself, we do offer services to help you with that. All right, well, we will do the trading on your behalf, trade for you. If you want more information on that, that's also on the website, pulsewavetrading.com, or you can shoot me or Frank a line and we will get back to you. All right, so with that being said, where are we going in these markets? One thing is certain. They have tried to get a Santa Claus rally going, and it has not been going very well. Now, on the surface, you may look and say, but Dex, the Dow was up 500 today. So what? Exactly. So what? So what? Dow's up 500. It used to be a time long ago where a 200 or 300 point move in the Dow up or down was ignored as just noise and nothing to fret about. As a matter of fact, there was curbs put in on the Dow at around 300 points, but between, I think it was like 250, 300. I think it was 300, and there would be timeout, to let the market calm down. Curbs would be put in to slow the trading somewhat. But nowadays, the Dow can move 600 points, even 800 points, and it's nothing. Have we not seen the Dow move 800 points only to erase all of that going into the close? Of course you have. Because 5, 6, 7, even 800 is the new 300. That's basically what it is. All right. So to round it off and put a median on there, I would say 600 points up or down is the new normal. It's the new 300. So 600 Dow points is the new Dow 300 points. It means nothing. All right. The market can whipsaw you to death with those 600 to 800 point trading ranges. And on the really volatile weeks, you may have 1,000 point trading range on an intraday basis. All right. So it's not a big deal like it used to be. I mean, the Dow moving that much would used to make news. I mean, it would be breaking news. If you were watching Young and the Restless, breaking news, the Dow is down 700 points. Is this the end of the world? Stay tuned for Ted Koppel. No. Now it's like the Dow moves 700 points and it's like, and it means nothing. And I think part of the reasoning for that is that we have thousands, tens of thousands of Dow points that is nothing more than Fed stimulus actions. We have such an enormous stock market bubble. And I'm not just talking about the Dow. I'm talking about the S&P, the Russell, the NASDAQ. All of them have been hyperinflated to levels that were only dreamed about as being possible in like a faraway galaxy in the distant future, 1,000 years from now. But no, these realities are today. You're seeing it happen today. You're seeing it happen in this day and age, not 1,000 years from now. And that should be concerning to most people. Yes, we trade, we want to make money. And we don't really care if the market's going up or down. But there are a few things you should be aware of. One, the higher the Dow goes, the poorer you will become. All right? You need to understand that. The Dow is the new smokescreen for the decimated economy. They figure as long as they can balloon up the Dow some more, you won't get a clue. You won't say, hey, something's not right here. Because you'll be happy because you look at your stock portfolio. If you're in blue chips, you'll say, ooh, my blue chip stocks rose even more. And it has a effect on the psyche that something's right. So when they massage the government numbers and inflate them to make them, they inflate the numbers that they want as talking points and just ignore the other numbers or talk them down or try to spin them as being not as bad as we thought, or they'll have a target that is so depressed that if the numbers come in at a beat, everyone's elated. But then to make the bad news not so bad. So if you're expecting inflation to go up 3% in the next 30 days, right? They'll come out and say, we're expecting inflation to go 6% in the next 30 days, right? Then the number comes out, let's say it's just shy of 3%, like 2.8%. They'll say, what a beat. The numbers beat. No, they didn't. You were already expecting 3%. You just said you were expecting 6 so that it would look better. So that you can make 3 more palatable to the people. But it's not. It's horrific. You just made it sound better by saying, well, we thought the estimate was 6, but we got 3, so we're this is great news. It's not great news. It's not great news at all. It's horrific news. Okay? It's just it is what it is. It's almost like going to the doctor and the doctor has found that you have cancer, God forbid. And this is how he sells it to you to make you say, oh, this is that they're having cancer is great news. So you'll come in, they'll say, okay, we got your labs back. And we have great news. Remember, I told you I was concerned that your labs were saying that you were going to get hit by a bus crossing the street within the next 30 days. Well, I have great news. The labs have come back and you're not going to get hit by a bus crossing the street and die in the next 30 days. Instead, you have cancer, which means this is wonderful. We can deal with this. We can give you medicines and treatments and alternative treatments. This is great. Because I thought you only had 30 days to live because I thought you were going to get hit by a bus, but the labs come back saying, nope, you just have cancer. This is excellent news. And then like a dummy, you'll say, oh, this is great news. Oh, I got cancer. Oh, wait till I tell them. Oh, tell everybody, man, this is great news. Because getting hit by a bus and having your life come to an end within the next 30 days sounds worse than getting a cancer diagnosis. That's what they do. They take the horrific news and find a way to sell it to you and make it sound palatable. And that's what's happening right here. Mark my words, ladies and gentlemen. I do not care how much higher the market goes. You know how this ends. Don't let them blow smoke at you. You know how this is going to end. You've seen this before. This is not rocket science. It's just facts. It's just facts. That's all. Facts. Okay? All right. So with that being said, we're going to take a look at just a couple of charts real quick. I just want to show you that all the manipulation, it doesn't even scratch the surface of what's really going on. They can no longer pump the market and expect you to just, be tossed to and fro by every wind of doctrine, so to speak. So let's take a look. All right. So here is your Dow Jones. All right. Let me share my screen with you. All right. So this is the Dow Jones by way of the ticker DIA. Now, you had a nice little rally today. Now, keep in mind that this market gapped up on this rally today. And what's probably going to happen, we'll probably rally some more on Thursday. And maybe even stretch out another rally on Friday when the market closes early. And then since the market's closed Monday, when it reopens on Tuesday, may even get one more little rally out of it. So you got a potential of 3 more up bars coming, potentially, before you hit resistance and then be forced to fall down and close this gap. Make no mistake, you gapped up today, ladies and gentlemen. That's right, you gapped, which means you have to fall down to close said gap, right? If it doesn't do it immediately, whatever little up in smoke thing they try to do, it's going to reverse and fall back down hard. I just want to give you the 411 on that, okay? Please don't be fooled by these things. You can't make this up. There was no technical damage on the chart, even from the rally today. I just showed you that. It's still bearish. Here's your gold futures. Look at this. Even though gold did whatever it did today, look at this. You have a crash alert now for tonight into tomorrow's trading in gold. And guess what? The 1700 is coming back into play yet again. You can't ignore this stuff, folks. Please be careful. Trade what you see, not what you think. Follow the reports and you will be okay. The system works as long as you work the system. Sometimes you have to stay in a trade, stay with the trade until the market turns. All right. We call that drawdowns. Well, you may be in a long-term position. You could be in a position for weeks, having the market go up. Like let's say you're short and this market's going up and you're like, it hasn't stopped me out yet. It's still going up, man. It's going, oh my goodness, it still hasn't stopped me out yet. I'm so afraid it's going, oh no, I'm going to get stopped out of a big loss. And then the market says, I got you, don't worry about it. And then it takes care of you. And then it takes you all the way down here so you can get your money. It's like that sometimes. Okay. Just be patient and you'll be all right. All right. It's just how it is. If you want to learn how to trade and move like the big banks and the large institutions, that's what the pulse waves were designed to do. All right. So you're going to find yourself staying in positions longer. Just follow the recommended stops on the report or pop your way through it, and you will see that you're going to be all right. It's just the way the system is designed for that reason. All right. Again, nice little upsurge today in your gold and your silver here, silver futures. But now we got a crash alert that we cannot ignore. It is what it is. All right. So watch it. Trade what you see, not what you think, and you will be okay. Now, those were the gold and silver futures contracts. But what about GLD? It also has a crash alert after hitting a new weekly high today. And it didn't have a big upsurge like the futures did. Think about that. That's a divergence. And you got this light blue bar going up, which signifies consolidation and neutralization in the market, meaning you're not going much higher than where you just went for a period of time. Here's SLV silver. Crash alert too. Just like the futures, you can't ignore what the market is showing you. It's saying something is not right. Don't be fooled. Here is the Russell. Still red. No technical damage on the screen. All it did was bump its head at the bottom of the Kumo cloud. That's it. Looking to sell rallies, ladies and gentlemen. That's all we're doing. We're just looking to sell rallies. All right. Here is the NASDAQ 100. Same situation. Selling rallies, bumping its head at the bottom of the Kumo cloud. Still red. There's nothing green on the screen in these stock indices. I don't care how they try to pump it. Here is the S&P 500. It's still red. I was trying to get a little technical bounce from today, but again, under mad upside pressure. And here are your bonds, the long bond, ticker TLT. New weekly low today, still red. It's still red. And last but not least, the US dollar, it's still red. It's still red. Everything's still red. The bear has reclaimed the markets. All right. You don't got to like it, but you do have to deal with it. And with that being said, remember the system works if you work the system. So remember, bulls make money, bears make money, and pigs get what? Slaughtered. So remember to take what you can and give nothing back. And you know what it is, folks. I'm out of here. Happy holidays to everybody. Peace out.